right, good morning, guys. How's the chat doing? Anonymous, good morning, man. Tom Struct, Delta Chi, Kipto Kanti. I can't say that out loud. But, just say Kyle's Batman video. Oh yeah, you just watched that? That's pretty. Yeah, the community got me into doing that one. They wanted me to do that since like Halloween. Who's looking to go short, says Anonymous. Yeah, it is definitely, we're in an area where we should be preparing for shorts, but we definitely need to wait for clear signs first because we're also in a zone where the liquidity could be used for an entry to bring this up to around 95.4, where there's about $6 billion worth of liquidity. And yesterday during the live, we also analyzed the local liquidity, and we saw that there's some stacking right here as well. People anticipating that this is going to drop, and so we got more and more liquidity stacking above here. So, and that usually acts like a magnet to bring the price towards it, right? We'll go over the trade we did yesterday in the live right before we had to leave. We basically entered here off of the inverse head and shoulder structure. We had the confluence of breaking the VWAP. We have the confluence of Blaker structure, the change of character occurrence that occurred here, and the local demand zone right here that we bounced right off of in confluence with a previous point of control. So we had lots of reasons to jump in. We targeted the opposite side of the valley area. Anyone who was a part of any community that I provide signals for, you'll know that I've got out right here because there was a 3,000 Bitcoin sell wall, and normally those are insanely tough to break through. But after about 1, 2, 3 candles here, a consolidation against it, and then another 3 candles consolidation against it, like the sell wall was getting slowly smaller until eventually, like right here, the wall was lifted, and then we broke through it, and then hit our primary target. Let's see. Now that we're done that, we are now currently at the previous extreme high of this range, where most of the liquidity is resting, right? And we're grabbing it right now. And that liquidity above us is normally used as exit liquidity, so it could create a basically induce a drop, but you still want to wait for structure to define the reversal first. Like I won't usually jump in on a single candle unless it's a swing failure pattern, right? So we are definitely in an area where we need to prepare for shorts. I can update the fixed range following profile poll from here to about here. This is where we've left it so far. Didn't really adjust the valley area data very much, but we know we are deviated away. One deviation tool you could use is the Fibonacci retracement. You can pull it from the valley area high to the valley area low, and you can adjust the settings so you can define the distance, the percentage distance away from that zone. So I got here, we're over 50% away from the valley area. Doesn't mean that we're going to be like coming back to it, but whenever we're around like the 50% level or the 25% level, there's usually really good confluence to prepare for reversals. If we deviate further, normally we get like a more harsh correction back to the valley area. So we'll see what kind of structure that we get, but we're definitely in an area we need to prepare for shorts. Let's see what kind of liquidity, what the liquidity heat map looks like. So now that we've been ranging here from here to where are we at now? 2 days and 14 hours. So now we'll need a heat map pull of over 2 days and 14 hours. So I'll pull that up. Let's see. So we can use the 3-day chart. All right, so yeah, we still have that zone above us. Exactly $95,241.42. There's a $104.2 million resting there in liquidity. And that's in the form of liquidations. So if we come up there, that's how much money is going to be liquidated in the market. There might already be some people getting stopped out with their stop loss right above that wick. And stop losses, depending on where they're coming from, either the spot environment or the futures environment, they have different types of impacts over the price action. If it's a spot trade stop loss, those are known as like trigger rebuys. So those can induce pumps when they're hit, right? So we'll see. That's why you have to wait and see what kind of reaction you get when liquidation levels or order flow levels where you anticipate stop loss to be hit. You got to wait for the reaction first before you take action on anything. But we did just grab $111 million in liquidity at 94.6. So we are in a spot where we could anticipate a reversal. We just got to wait for the proper structure. And the structure that I look for is basically just an opposing change of character. So if we get like a double top structure or a head and shoulders, like those are easy to identify for beginners. But the structure, what you're basically looking for is a strong low to be produced by a 2-candle pullback, right? And then that strong low to be taken. And then we have a change of character occurrence. But we'll see what happens. So it looks like we're going up strong right now. So if you see the market's going up and you can't jump in on the trade, then you have to look elsewhere, right? So let's find another asset that basically correlates with Bitcoin's price action, so we can use Bitcoin as a indicator to help us with our setups. Because right now Bitcoin, yes, it's going up, but it doesn't mean we should be entering any longs unless you're already in on, let's say, this double bottom break or the trade that we entered before. Let's see. Sam K saying cat sounds. Bitcoin to $500,000 by no VWAP. That's funny. 3,000 Bitcoin sell while it's small. I could easily buy this. Yeah. Everyone's asking me to buy it up too. I don't know who Sam is, but this guy's right in the chat. Okay. Ronald Edwards. If Bitcoin ranges for a few weeks, will the money flow into large caps alts such as? Okay. Yeah, typically when Bitcoin is range bound, retail investors get bored and they throw their money into other stuff. So yeah, typically the other dominance will start to increase when Bitcoin's range bound. The best time for alts is when Bitcoin's range bound while we're in the overheated zone for the RUP chart. So if I'll pull up the RUP chart. When we're in the overheated zone, this is how you call an altcoin season, by the way. If you can't do it through structure, like this is a very simple way of doing it. You can obviously front run this with basically using the others dominance chart to prepare for rallies. And the rallies are like the front run to the season. So you want to be getting in during the rallies because the season's basically your exit plan. When things are going crazy, you want to be preparing for like the extreme highs and basically get out. So when the RUP chart's at the 2.35 level, the moment we get in there, the moment between when we're in the overheated zone and our next daily change of character on Bitcoin, in between those two moments is when we have an altcoin season. The money starts flowing into network tokens first, then it flows into the anything built off those networks like meme tokens or anything that's low market cap after that. And then that's typically the end. Then we start having the massive correction. And the price action's just ridiculous. Like you see stuff like what we're seeing now, honestly, like just wild. Some of these moves that we've had during this pump are fairly unsustainable, but we just have these wild, like crazy unsustainable moves in the altcoin space. It takes a lot less money to move them too. You had the plug, Sam. All right. I don't think Sam understands trading. It's funny. I think he's just goofing around. So what assets do you guys want to look at? Because we've looked at Bitcoin and we can't take action on anything. We can't really prepare for anything because we don't have any key levels that we can actually trade off of just yet. When we get our first like 2 candle pullback and then a higher high, then we can have at least a key level that we can watch for a potential change of character occurrence. And depending on where it happens, if it's happening like around here, we could have additional confluence for that change of character for the short. This is going to be an intense high volume area right here. I've been anticipating this to cause a crash for a while. Pretty much since we've been down at 72K. It's either going to do some massive move to the upside or a massive move to the downside. I don't think it's going to be a low volume move. Look at where it's at, right? We just got acceptance into this value area, by the way. The moment we got this higher high with this candle, we got acceptance into this macro value area right here. You want to have your first break of structure inside a value area in order for you to be like to rely on the price action to behave the same way it did while it was inside that value area. So this is technically pretty bullish, what just occurred, but it doesn't mean we're not going to get a correction back down to the value area low again before going up. Because that's an insanely high liquidity area zone. When we had the correction right here, one second, my thing's being all laggy. The correction right here is what induced all that liquidity to start getting stacked. And then when we came down, came back up, more liquidity here was stacked. All right, so we got some requests on some assets. AVAX from Ronald. So we'll take a look at that, man. And once my computer stops acting up. Just give me a sec here. I'm interested in all right, now I'm just gonna refresh this chart, guys. I don't know what's going on. Life is buffering right now. There we go. Crypto. You're interested in Bitcoin or anything that ranges really well. Okay, so that sounds like you're a day trader. I think you said ADA was a good range asset. Cardano is actually a trend trader's asset. There are good range bound moves that it does sometimes that are pretty easy to predict, but if you look at Cardano's historical price action, I don't know why this is so slow, guys. I'm sorry. The historical price action of Cardano, like typically when you get in on Cardano's like trend-based setups, they go on for a while, like sometimes like 30 days, 60 days. Like if you don't get in on the like the initial setup, then getting in safely after that is usually pretty hard for at least the continuation of the trend setup. And once it loses like its momentum, then it starts the next trend for like 30 days. So Cardano's like best for trend traders, but doesn't mean there isn't like really good range trade opportunities. If you want a range trading asset, I would recommend Chainlink is a very good one. Chainlink is super good. Like we had ranges that last on average 30 to 60 days. And then we have some macro ranges that last like 500 days. I'm sorry it being so laggy here, guys. Let's see what is causing it. Maybe I'll get rid of my BlackRock tracker. Let's drop the SUI chart. DP, why is there not 55 likes? There's 55 people watching. I think it's because a majority of people are just looking at a blank screen right now. There's nothing interesting going on. Just try to get this thing loading up. Would you buy any alts right now? We can go through a list of alts, but it's really based on its structure. I want to be when I buy an altcoin, I've became a lot more conservative as a trader over the past like few years. And when I buy an alt, I want to make sure that my money's working for me as soon as possible, or buying it at an area of extreme confluence. So I recently bought Cardano. I recently bought Filecoin. I recently bought DOT, because they were all at like extreme lows. If you look at them in the daily, you'll know what I'm talking about. But when you want to jump in on a position of strength, you want to make sure that, let's look at DOT for a second, for a good example. Go on the daily. So DOT here, if we zoom out, I'll get rid of this. This is the daily. DOT has been ranging in this range for 1,078 days. It has consistently been falling down to these extreme lows around $3.25 area to extreme highs around $11. And what normally occurs is we break like double bottom structure, break momentum, right? Double bottom structure, break momentum, double bottom structure, massive double bottom structure, break momentum, double bottom structure, break of momentum, right? And then we start trailing up to those extreme highs. All those forms of confluence that we see occurring every single time we get down here, those accumulation warnings, after all those the confluences occur, we end up getting to around like $11. So I got into DOT. I'm not recommending you get into DOT, but that's what I ended up doing. And right now we're at $4.30. And we need to get this thing past some key levels along the way. So the key levels I'm watching on DOT is $4.72. I'll be watching that for a potential reversal. Right now we're in a high liquidity zone for DOT. Same for Bitcoin, right? Got those two confluences together with Bitcoin and DOT. So here we might see a reversal that brings us down to our local support level. If we break past this, then awesome. Then our next barrier will be $5.10. After that, our next core area we're watching up for is $5.70. Then we have our macro POC. Yeah, so all these are areas we want to have alarms set to see if we get any macro higher time frame change of character occurrences. Because if we end up getting that, that might induce the drop to come back down. Because yeah, the daily changes of characters are a lot more stronger than the lower time frame stuff. But that's dot right now. If we zoom in on the hourly, we can see we're starting to populate like bearish divergence. Oh, this is broad divergence. So it's using these highs here with these highs. We have like lower time frame ones right here being built too. If I go to the 15-minute. Okay, there's not diverging. They're pretty close. But this is our key level right here that we're going to watch for dot, which could induce the drop. I'll be watching this local low here. But yeah, we basically just got to watch it for dot hitting $4.23. If we break that area, have it act as resistance, break a structure, you can jump in on a short, use the break structure strong high for a stop loss, and target these lows here against these previous highs. But yeah, Bitcoin's kind of dot's boss lately. So whatever Bitcoin does, dot's going to do alongside it. What was the request? It was AVAX, right? Yeah, so we'll look at AVAX and see what we can find there. Last time we looked at it was April 1st, so about 24 days. All right, zoom out. Let's see where this trend line came from. Okay, so the trend line came from AVAX when it was at $52. It's now at trading at $22.52. AVAX is building a massive macro double bottom structure. SUI just broke its massive double bottom structure recently, and it hit its measurable target already. So that's telling us that if you compare the two assets between SUI and AVAX, they're both network tokens. It's telling you which ones has more relative strength right now. And like right now, that's telling us that SUI has more relative strength over AVAX. Those are like huge warning signs into telling you like which assets are absorbing most of the market shares against their competitors. So if you're watching an asset and it breaking its key levels and other ones are not, you should be focusing on and potentially investing in those assets that are actually breaking their key levels, because it's telling you that all the investor interest is in that asset. So that's a good way of like finding out which assets you should pick and choose for potential longer term holds. So right here is a huge key level. We're fighting it right now. I have the trend line against the full body neckline. And we zoom in on the lower time frames, we can see how we're fighting against it. Right? So we smack down against the like the daily full bodies, the price acceptance on AVAX. What we want to see, obviously, is that like a higher high for a larger time frame break of structure. So right now we're on the 4-hour. This kind of looks like a demand zone in lower time frame, so let's zoom in. Yeah, so we have an impulse move, base, impulse move. So this is a form of demand zone. So we're going to mark this on our chart. I'll use rectangles for mine. And we have a range here, so let's pull the fixed range volume profile. Right, and we're currently hitting the value area high. We got some good bounces off this local demand zone. Let's change this so it's the order set to back. There we go. So that candle will stay over top. Let's zoom in on the 15-minute. So AVAX is technically in a zone in this local range where you want to prepare for shorts as well. It's got some relative weakness against Bitcoin because it's like Bitcoin, you know, where Bitcoin is relative to its range, right? It's way up here, whereas AVAX is still within it. So when Bitcoin starts to correct, likely around this high liquidity zone here, or maybe even now grabbing this local liquidity here, then AVAX is going to follow suit. But we want to wait for that change of character occurrence. But unfortunately, right now, it's way down here. So we need to have this level broken, at least for my core rules, for when I trade. I usually want to see a change of character occurrence before I jump into a short or a long. We'd have the confluence of breaking past the POC, but typically when you're trading inside of value area, you have lower win rates. If you want to have a higher win rate, you want to see the price action deviate away from the value area a little bit, and then give you the change of character while having acceptance into the value area at the same time. Those usually give you the best trades and the best risk to reward ratio. Waiting for this would be, I wouldn't recommend it. So hopefully we get more structure to help define a potential short with a better stop loss guard for a better distance away from our primary target, which would be the value area low. We can see undercuts happening right here. So I would mark that with the trend line and then validate it with the order books. The same way we were able to validate our trend line yesterday with Bitcoin using the order books, because before, if we look at Bitcoin on the 15 minute, I can draw it a little bit more clearly for you. We had this right here, this trend line here. In our signals, we're talking about how there's a 3,000 Bitcoin sell wall in line with the downturning resistance, but we also had the confluence of the POC. So we had tons of reasoning for people to put giant sell walls there until eventually it broke. But when I draw a trend line, I always want to look at the order books to see if traders are actually going to respect that trend line, if there are buyers actually waiting on it or sellers waiting on it. You don't just draw a trend line and blindly trust it. How many confluence does one of your trades normally have, Kyle, on average? If it's not hard to answer. It's very easy to answer. But normally 4 confluences is what I look for when I jump into a trade. I typically look for a value area high or value area low positioning. So wherever the positioning is of the asset, it's really important for me. A break of momentum as the pace of the seller shifted, right? So that's what I look for with momentum, or the pace of the buyers, have they shifted, right? And then, so we got break momentum, positioning in the value area. There's 2 rules. And then change of character is a huge one. It's the core rule that I follow for when I enter a trade. And or if it's not a change of character, it's a SFP. So I'll be looking for liquidity being taken from extreme highs from the wicks, and I'll be looking for an SFP candle aligned with that. If we get that, then I'm very likely to be jumping into a trade. And then I also like to use the VWAP for bias control. If we deviated really far away from it, then I'm likely to jump in, right? Even if I'm not above the VWAP. But then I'll know I have to watch the VWAP as a primary barrier concern. So if I'm jumping in, let's say down here, I would have to watch the VWAP and have alarms set to it to prepare for it potentially going against me. If we have a closure above it, in confluence with my change of character occurrence and confluence with the value area positioning, then I'm definitely likely jumping in on that trade like we did yesterday. My rules are pretty easy, and they actually have a relatively high win rate. So if you want to just take my rules, just take my rules. Because my rules are usually trading alongside the market maker. So you're kind of using the market maker as a tool, and your goal is to front run them with your exits. Like, market makers hate people like us. I don't know if it's the shirt fit or the red, but I like it, bro. What's up, man? Brian's in the house. I'm wearing red today because I think that the market's going to come down today, unfortunately. So I'm preparing for the correction, psychological support on my shirt. Crypto, stinky link. Got it, thanks. We'll look at Chainlink chart. Any of you know if Chico Crypto is okay? I used to watch his videos a lot. Chico, I remember Chico. I don't know if he's okay. I haven't seen him I used to watch him religiously when I first started trading. But I stopped following traders on YouTube unless, because now like one thing that really sucks when you're first starting out as trading, you'll notice that there's like tons of different opinions out there, and it's really hard to know who to trust. And if you want to know who to trust, just back test what they say. Like go into like, if they mention their rules, just go into like the replay mode on TradingView and just test every single thing they say. And if it turns out to be like all BS, then don't follow that YouTuber anymore. It's pretty simple. I think there's only like one YouTuber I watch now, and it's Alex O'Crypto. He's like the only trader I've watched in like over a year. And sometimes people refer me to other like people to check them out, but I'll just check them out once or twice, and then that's pretty much it. But Alex O'Crypto and I have like same kind of opinions when it comes to the market. We get the same trading style. Like he trades more with Fibonacci, and I'm starting to. Especially when things are trending and you didn't get in, right? It's good to be a Fibonacci trader when things are trending and you haven't jumped in yet. Let's see. Yeah, still we're getting a correction off of this liquidity wick here slowly. So we're starting to build actual structure. We'll see what kind of lows we get, but we only have one candle pullback. We need like one or two more. And then a higher high, and then we can define a level where we can prepare for a short. Kyle's shirt equals Powell's tie. Can you tell the difference between a SFP and a change of character as it's happening? As it's happening, it's very easy. Super easy. Those are like one of the two things in trading where you can confidently say like, yeah, that's definitely a change of character, or that's definitely a swing failure pattern. If you guys want me to go through that, I can go through that. Oh, he got married and he had a kid. Well, Alex O'Crypto just got married and had a kid, so he might be leaving soon too then. But no, I think that like him and his wife got a good like tag team partnership, so I don't think Alex O'Crypto is going anywhere. But yeah, let's go. I can go through the difference between a SFP and a change of character if you guys want. I don't want to bore anybody with that stuff, but if they already know it. But I'll go to the daily just to show you guys like one that I've been using to teach people SFPs lately, because it's very straightforward and easy to understand. But this is an SFP right here. Basically, you look for the defined range with your local highs here, right? Once you have your defined range, you look for a wick that occurred within that range. And you typically want to be doing it at value area highs or value area lows for your for an increased probability of winning your trade. Because then you'll have the confluence that other traders are likely going to back the flow of that trade. If you're doing an SFP internally inside of a value area, you just be a lot more cautious of like your surroundings and stuff like that, because it can have a huge influence over your setup. But here's the wick that you look for. This tells you that there's likely stacking liquidity above that zone. And market makers need liquidity in order to enter and exit the market with the lowest amount of slippage. So sometimes they'll induce the move to like come up and get a stronger exit. So you'll notice that we have like two wicks that will come up. So here we added liquidity, and then from here we came up again and took that liquidity and then closed back inside the range. When that occurs, this is an SFP. This is the definition of what an SFP is. Grab a local liquidity and close inside the active range, and then you watch the lows to be taken for your target. That's your primary target. However, SFPs can also be huge front runs to much, much bigger moves. So you initially target here as your core area of concern. But if we break it with a change of character, the change of character rule kicks in, and that could help induce a longer term reversal. And then you can target like the value area low, or watch out for the POC, for example, along the way down. So that's an SFP. Then there's what's called like a legacy SFP, which is basically the same thing, except you're looking way more to the left. So as you get better and better with local SFP setups, look to the left to see if there's a longer term like wick, like a historical like wick there that we can come up and grab that liquidity too. So it's really important that you use a horizontal array and a magnet tool to mark those highs so you can actually see if they were properly taken. This is like an equal high. So the liquidity may not have been taken. However, there are tools out there that I highly recommend. There's one called Argus, right? Argus will show you the wicks on multiple exchanges. So wait for that to load. It just takes a little while for it to load on your chart. Okay, it's on my chart. I can see a little bit of it. So here's like an example. Like we see how there's like this little blue. Let me change the so it shows you an exchange. Like you can sync it to other exchanges. I got Bybit, Binance, and BitGet. So it's using like high liquidity default settings. And you can change the colors. I usually recommend changing the colors so it syncs with the branding. So Bybit is usually like orange. Binance is yellow. And then BitGet is blue. So now you see your wick colors will change a little bit. It's tough for you guys to see on your side. But you can see, like if I zoom in a little bit closer, that on Binance, for example, where that little white dot I put, get rid of that magnet, right here, is where, right below that area is where like basically what the liquidity went down to, well, the wick went down to on the Binance chart. So it gives you an idea that liquidity might have been taken on a bigger exchange than maybe the one that you're looking at on your chart. And that can help you with getting SFPs. If you think it might be front run on your chart, but it's not. But that's an SFP. How do you get an entry on an SFP? Oh, you enter on the candle close. Sorry. So you enter on the candle closure. Depending on the time frame you're looking at, you're using the time frame. I usually use the 15-minute time frame for my SFPs, but if you see a daily one, those are usually pretty extreme. But yeah, I usually use 15-minute SFPs. They're really common. But you enter on the candle close, and your stop loss is right above the wick. And so long as the R&R is worth it to your primary target, like the lows of the range, right? Then you could take the trade, and then you can have your trade extend further if you get the change of character occurrence. So SFPs are really good front run setups. Now change of characters are, I don't know what happened there. Change of characters are a little bit different. They're later in the game, like you're jumping in later than someone that would jump in on SFP. But you need to learn market structure to understand what change of character is. So if you look at, if I draw a path here, here, let's just draw this. So we can pretend that this is any time frame you want, right? It could be the 5-minute chart, it could be the 4-hour, it could be the daily, right? Is the change of character occurrences happen they are basically happening in line with the time frame you're looking at. So if we have if we visualize this price action, let me just get a trend line here. Let's start from the uptrend, I guess, here. So we're downtrend here. So we came down. Let's say this is the start. We get a break of structure occurrence. Right? And that defines this as a strong high. We come down. We pull back at least 2 candles. Every time we have a pullback, you need at least 2 candles. right? And then from there, another break of structure, another break of structure. And then basically what's happening every time we get a break of structure, right? We're generating a new strong high, a new strong high. So when that strong high becomes broken, that generates the change of character occurrence. So here we got the break of structure, we came back up, and we broke this level. When we broke that level, that's our change of character occurrence. Right? And then what ends up occurring now, instead of focusing on the strong highs to guard our capital for our stop losses, we now look at our strong lows to guard our capital for our stop losses for our longs. Right? And the moment we have a change of character, the following break is a break of structure again. And we maintain that until we get our next change of character occurrence, which will occur when we have our strong low broken, which happens here. Now, if we didn't come up higher there, our change of character occurrence wouldn't be until this low when it breaks. And that shouldn't keep you out of jumping into trades if you see a double top structure like this, but you do need to be very cautious about this level being guarded and that we might not have it broken. So just be aware of that. Now this is all, let's say this is all the daily time frame. What's happening internally could be a whole other ball game, right? We could be having low time frame breaks of structures here, change of character here, right? But what's happening here, well, you basically have to monitor where your change of characters are happening in the lower time frames, and then watch the higher time frame strong highs and watch the higher time frame strong lows, because they're going to be your initial barrier when you're trading internally within this. I typically use the 15-minute time frame, but it doesn't mean I'm not aware of where the strong highs or strong lows are on the daily or the 4-hour. That could induce reversals or massive moves in the lower time frame stuff. So it's always good to start from the higher time frames, finding out where the strong highs are, the strong lows are, and then work your way down. So you have a bigger macro picture of stuff before you jump into lower time frame stuff. And that's basically it. I don't have a lesson or anything like that online for this, but there are tons of them. I have them in the course, so if you guys want to learn more about market structure, you can jump in the course. Let's get the... Okay, so now that rant's over, so your change of character occurrences, guys, if you want to have a higher win rate, you can use indicators along with that. Market structure is your first fundamental rule for almost every single strategy in the world. So if you learn market structure, that's your foundation, and then indicators are like a layer that you put over top of it for confluence. And you can choose whatever indicators you want. Just make sure that they work, back test them, right? So if you, one really good tip is to look at the extreme highs of a range and the lows of the range and see what your indicators doing during those highs and lows. Is it a stochastic RSI about to cross? Is it a regular RSI giving divergence? What rule do you want to apply at these highs and lows to help you identify reversals? And then as you add layers with your favorite indicators, then you back test them, go in replay mode, back test them, find out what the win rate is, and then that's going to tell you what your income is going to be if you do it in the live environment. But your ability to execute it is going to be insanely important, and following the rules consistently over and over and over again and without breaking any of your rules, that's what's going to make you a profitable long-term trader. It's just sticking to your rules. Because the moment you break one of your rules, the trade becomes you're in an area of unknown, right? You have no idea whether or not that trade's going to play out. So at that point, you become a gambler if you're breaking your rules. So just stick to your rules, and you'll do great in this space, I promise. And it's going to generate. You have to have a lot of patience most of the time, and sometimes you'll think it's going to go down, and then all your rules aren't met, and it goes down. You'll be frustrated, but yeah, just stick to your rules, guys. I had a question. Do you leave your USDT on exchange or do you take it off the exchange daily and do you use a VPN on Blowfin? I use a VPN on Blowfin. So yes to that. I use a VPN on any exchange, whether they accept my KYC or not, just for the security. I have a kind of like a rule that I apply when it comes to exchanges. You look at their withdrawal limit. How much can you take out in a single day, right? That's super important for knowing like how much you should put on that exchange in terms of USDT. So on like BingX, I have like $100,000 account for swing trades, and that will never go past 100,000. If it goes past 100,000 by the end of the month, I pull that out, and that's what I either pay myself or I'll put it into Bitcoin or I'll put it into an asset or a dividend stock so I can earn passive income. But I take the surplus at the end of each week or each month, depending on like what I'm feeling basically, and then I put that into other stuff. Alex of Crypto, are you on the road, bro? Yeah, Alex of Crypto is coming over today. And then then I'll just take that off the exchanges and then I'll trade with that. And on my Blowfin account, I normally keep $10,000, but I haven't really been paying myself very much lately. So now it's at like $27,000. But I won't let that one go past 100,000 because its limit, I believe, is 1 Bitcoin in 24 hours. Persistent size matters, says Alex of Crypto. Yeah. Yeah, VPNs are so cheap and great ROI. There are free VPNs out there, but I don't usually recommend the free ones. If you're really into privacy, then Mullvad is a really good one because you can pay with Bitcoin if you want. I use Bitdefender. Like Bitdefender is great. And Bitdefender allows you to add it onto like 12 different devices, and it's super cheap. Alex of Crypto, you're streaming, bro? I didn't know you were going to be streaming today. Okay, so I've got another 10 minutes before I got to head out. 60-day dot target, $10 still valid. Yes, dot target that I have in mind is still valid for $10 for sure. Is it becoming more and more valid? We had a moment where we dipped down below. If we got to break a structure down here, I was really concerned about price discovery for DOT, I'll tell you that. But yeah, we got that strong break finally. So a $10 target still in mind. The time now might be different. The average run up that we have is usually fast paced compared to the drop. Like the investors don't like to sell DOT, but they definitely like to buy it. So we're forced to get this high. How long did it take? It took us 155 days that time. This move from here to here was 35 days. So we're looking at like a medium between the two. So we can't predict the time it would take to go up there unless we know of like certain upcoming events. Like for example, let's say rate cuts or stuff like that could help boost the economy to increase buying power. Unemployment data, all that kind of stuff could help influence it. AVAX is getting that stronger pullback. Bitcoin's being a little bit crunchy. Zoom in. We got a 5-minute double top. These are bearish. We didn't get the change of character on the 5-minute because we didn't get the higher high, right? If we got the higher high, then this break would have been a change of character occurrence. When's our last 2-candle pullback? That's what you would want to look for. So our last 2-candle pullback was here. So technically a change of character occurrence to happen with Bitcoin on the 5-minute chart would be way down here. So we want more structure to define a better short setup if you're using change of character as one of your rules. How you spell VPN? What? Engulfing on Bitcoin. Yeah, engulfing on the 15. Yeah. Remember, we're also in an area of high liquidity, so like it gets weird sometimes. Normally we have an aggressive wick, take it, then we SFP. And sometimes you get this crunch. and then you're forced to look at the lower time frames. What other assets you guys want to quickly look at? We looked at AVAX for Ronaldo. Sui just passed Lincoln market cap. Really? Jeez. Let's look at Sui really quick. We were looking at the 3-minute time frame last time, so Link. We have, yeah, we were talking about this double bottom structure hitting this target. I wasn't expecting for it to get there that fast. Obviously, we got this area of concern, which I thought might have halted the price action. Like you always want to mark your barriers along the way up that could prevent you from having your target hit. But it doesn't mean that the asset has to slow down at those barriers. Sometimes we just break right through it. Now Sui is at a key level that I've got marked. I usually put like my trend lines to be thicker if they're like super important levels you want to watch. This is a key level where we had strong area of support and resistance consistently. So we would see that whenever you're looking at strong areas of support, like previous support, you can assume that there's a lot of buyers in that area, obviously, right? And that's why they're likely to act as resistance in the future, because those buyers might not have gotten out when we broke those lows. So when we come back up and test those zones, it gives them the ability to exit, right? And normally at their break even, unfortunately. A lot of traders are break even traders. So those are zones you have to end up watching so the weak hands can get out. And you can get a general idea of where an asset is with its with their averages by like looking at value areas or looking especially at on-chain data. So if your asset has on-chain data tools that allow you to track like stuff like that, like Bitcoin does, you can literally track what the average, like how many people are in a profit or loss, right? If you can see that with your favorite asset, it's going to be a huge edge for you to know like core areas that you need to watch out for. So if you see, for example, if you see a huge uptick in the supply and profit and loss at a certain area, we have a huge uptick, then that tells you, okay, there's a large amount of people that are in a profit when we get to this area. So it kind of gives you an idea of where people averages are and where sell pressure might increase. Unfortunately, alts don't have very many tools like that. You pretty much have to build them yourself. But if you're a developer and you're listening, basically you just need API connections to the on-chain tools like SolScan and BSC Scan. They'll help you like build tools just like the one we saw, just by using their APIs. And we're currently going against that core area for Sui. The key level that you want to watch for potential correction is right here. This is where our change of character occurrence will happen on the 15-minute time frame. We're building a little bit of a regression trend, which has kind of been Sui's favorite thing lately. Regression trends. Regression trends are when you see like uptrending structure like this or channels like this, and we're constantly grabbing liquidity along the way up, like constantly. It's not letting people do shorts, basically, just constantly punishing people for shorting. So make sure you wait for those changes of character. So yeah, key area here. Local demand zone right now is right here. We also have a previous value high alongside with this demand zone. All right. Bitcoin one more time. Okay. Well, we got over all that in the beginning of the the live, and I have to go in a moment here. But if you want to go over like Bitcoin, just basically rewatch it, buddy. Sorry. Crypto. What's your normal leverage? I'm guessing it's 0, no leverage, not sure. Or does it depend on the setup? I always try to never risk more than 1%. And your stop, if there's a bunch of situations, sometimes I'll use super high leverage if I am not confident in for some reason, the liquidity of the strong low. So I'll use really high leverage in that kind of scenario, and I'll explain that in more detail. But it all depends on. So I normally use 3x leverage because I'm never usually in more than 3 trades at once. So if I'm at 3 trades at once, all my funds are being used up in those trades. If I'm using 3x, if I'm using 4x, all but 5% of my funds are being used in trades. If I'm in like 3 trades, for example. So I'd give advice on that based on the amount of trades you can handle. The lower leverage, the lower the fees, right? Or on your trading style. So if you're trading like SFPs and you're concerned about liquidity, if your stop loss were to get hit, then I would normally recommend higher leverage. And your leverage choice will be defined based on the drawdown percentage of your setup. So if you have like a 0.1% drawdown, you could use like 100x leverage, right? And then your stop loss location would pretty much be equal with your liquidation level in an event like that. If you can have your liquidation level where you'd only lose 1% when you get liquidated, right below your stop loss, think of that like a second safety net, because if you get stopped out, there are sometimes, you guys probably have been through all this before, there are sometimes situations where your stop loss isn't honored, and instead of it getting hit here, it might get hit down here, and then you lose way more than you budgeted for. So it'll cost you maybe 1 extra trade in order to cover that loss. And you want to make it so that when you win your trades, it's equal to 2 times or more the value of your losses. So when if you have like a 50% win rate, for example, you can consistently be profitable long term. So if you have it set up so your liquidation is close to your stop loss, they can't take more than what's in the trade if you're using isolated margin mode. If you're using cross, you're just screwing yourself over. But I highly, highly, highly encourage people not to use cross margin, because unless you know how to manage your account balance, because it's your entire balance that's at risk when you have your stop loss. If you get liquidated in the event your stop loss isn't honored and cross, and to assume that your stop loss is going to be honored every single time is a huge mistake. Even if it's like the best exchange in the world, in my opinion, that's Bybit. But I can't trade on Bybit, so I'm using Blowfin. Blowfin's great though. So yeah, try to have your liquidation level close to your stop loss so that you only lose what's in the trade if you're using isolated. If you're using cross, make sure you manage your account balance so that, like, say for example, your budget for your trades is like $100. You do not want to lose more than $100 so your stop loss gets hit, and you're trying to gain $200 or more. Then have like maybe $110 in that account, and then you will not lose more than that $110. You want to have a little extra money in it, more than your budget, because across, like the nature of cross, it kind of like moves your liquidation level a little bit further down. It gives you a little extra breathing room, but yeah. Listening to Kyle is like a soothing SM. Okay. Do you believe we're getting into an actual altcoin season? We are getting into a rally. I wouldn't call it a season. Let's go to others' dominance for a second. We just triggered a rally confluence, though, right here. So I spoke about this a little bit, I believe, yesterday's live. But the others dominance chart. The others dominance basically excludes everything from the top 10. So as funds flow out of any of the top 10 assets into altcoins, this chart will go up, right? And you'll notice a large amount of assets will look like this chart, right? So if we look at SUI and we zoom out on the daily, like we had this downtrending momentum here, we built a double bottom structure and we broke it to the upside. We have a macro double bottom here, we have an internal one here, jumping on the internal, started this huge move to the upside. Now, what's really, really helpful about this chart is if you see that it's an asset is looking like it, or maybe it's gone further up like SUI, right? Then that tells you which of the assets that are part of the others dominance that could be like doing extremely well. I don't think SUI would actually count for this chart because now if it's being chain linked, then it's part of the top 10. So it'll be excluded from this. But yeah, see what assets are looking like this, what's correlated with this. And when they break their key levels, which they should all look a lot like this, then you can anticipate them to behave like this chart, and you can watch the key levels on the others dominance chart in confluence with the key levels on of that asset. So right now we got a change of character occur on the daily. We would prefer to have a full body daily close above this neckline, and then we could anticipate it to rally up to where I'm watching is right here. It's a huge key area. Obviously, we have some resistance here that we got to watch out for. But this change of character occurrence is going to give us acceptance into that range to make it relatively easy to get to this level. And then when we break this level, we'll be watching this one here. This is where I anticipate we really want to break further past this, because I'm not going to define it as a season until we get past 12% right now. If we get past 12%, then we're basically in a season. But we can anticipate when a season is about to occur by looking at Bitcoin. If Bitcoin's the boss of the market, right? So if you're looking at an area where a massive amount of people are in an extreme amount of profits, which is when we're in the overheated zone of this chart, the altcoin season starts very, very shortly after this. This is when a large amount of people are taking their funds out of Bitcoin into fiat or into altcoins, and usually it's the network tokens first. And then while we're in the zone, we wait for the daily change of character, and that's what ends the season. And you want to get out when Bitcoin confirms its exit, because if you don't, alts, when they fall really, really hard. So where we are right now with alts is the front run area of the altcoin season. So we can anticipate the altcoin season happening after the fact, but we have to watch key levels along the way up. We're definitely not going into a season, but we're definitely going into a rally for most alts right now. Poppy Master, Kyle, any opinion on MEXC exchange would be very appreciated. So MEXC was one I held back from like mentioning or promoting for a lot of people. I became a partner with MEXC, but one thing I do every morning is I'll look at the reserves of every exchange, just to make sure that everyone's funds are still there in case I need to notify anyone of anything extreme. Because we'll normally find out if anything's bad is about to happen to an exchange before the news comes out, because we're looking at the reserves every morning. MEXC, their reserves are very, very volatile. So just going to warn you on that. They will have a promotion where low fees are in play, and then the reserves will go up like really, really high. The moment that promotion ends, the reserves get cut down like 20% almost in a single day. And like a 10% is a warning for me to potentially take my funds out and wait for the dust to settle. But 20% is usually huge for me, and I'll take my funds out immediately, and then I'll wait and see what's going on. And if I see something in the news or whatever, then I know I made a good call. But with MEXC, it does that all the time, right? If you see that happening to Binance, everyone would freak out, right? But if it was happening like something like MEXC, that's like a regular thing. Like it happens on almost a monthly basis. So with MEXC, I only keep a very, very small amount of funds. I got like $1,000 on MEXC, and I only put funds in MEXC to participate in they have some really low market cap stuff that I might want to invest in, because it only costs $10,000 to get listed on MEXC. And that's part of their problem. Like if you think about like their pairing liquidity, it only requires $10,000 to put your asset on there. So if you were having $10,000 worth of USDC or USDT and $10,000 worth of the asset, that basically means only a maximum of $20,000 worth of volume could occur. So if you notice on MEXC that you only can put in a certain amount of funds on certain assets, it's because they don't require very many funds to have them listed. So unfortunately, a lot of traders will pick their exchange based on the fees, but they should be picking it based on the reserves. How safe are your funds when you put them on there? And I'm not bashing MEXC, but my funds don't feel very safe, so I only put a very small amount of funds on it. KuCoin also has that problem. So you'll notice that KuCoin's charts are very wicky. There's wicks all over the place for a lot of their assets. It's because like the moment they have an arbitrage event, they lose a large amount of their liquidity, and so everything becomes very scam wicky. So it takes a very small amount of funds to move an asset on KuCoin a lot of the time. Matthew, how you doing, man? I'm thinking which cryptocurrency to buy. How could I participate in the... Oh, dude, that's a scam. All right. You're either a scammer or you're just unaware that that's a scam. Let's see. Let's go to Bitcoin and see what it's doing now. Oh, didn't mean to move that. Minute. So yeah, we got another internal break of structure. Yeah, we double topped, which is a clear, like it's usually a clear reversal indicator. We didn't grab the higher high, which makes a lot of traders nervous about the liquidity being like chased after the fact. So if we got that higher high, I would have jumped in on this trade. Doesn't mean we won't go down, but it doesn't meet my final rule. So changing the way to choose exchanges. Thanks, bro. Yeah, I actually like on my server, I have it listed, the exchanges that we like talk about or promote. We have it listed in order of safety, like based on the reserves, like how stable are the reserves. So here, we got Bybit at the top. Like even after their hack, I wasn't even worried at all about their stuff because I know that they had like so much USDT reserves that they could cover their loss. Plus, they have their stuff insured. So I wasn't worried about Bybit. We have Bybit, Blowfin, Bitnex, BitGet, BitFi. Like MEXC is not even on the list. It would be near the bottom though. And make sure that they show their reserves. If they're not showing their reserves, don't even trust them. Because like that just basically tells you that they can do anything with your funds and get away with anything. And you have no idea what they're doing with their funds. So check to see if they have proof of reserves. And they'll always be in the bottom of their website. You'll see POR as an abbreviation at the bottom of their website. And you click on that and it'll show you their reserves there. Or you can see if they're connected directly to CoinMarketCap. CoinMarketCap allows them to put their reserves on connected to their API, so it'll track their reserves and post it on here. So let's say we look at an exchange exchange list, like right here. They'll have an icon next to their name. They'll tell you whether or not they show their reserves, unless they changed that very, very recently. They changed that very, very... Oh, okay, there we go. There's an icon right here that'll tell you that they do not show the reserves for that exchange. Doesn't mean you don't trust them, because you can click on them and then find out they show the reserves on their website and they just haven't connected their APIs to CoinMarketCap. So if you still want to look into that asset, that exchange, make sure you go to their website. It just means they're not on here. So let's say, for example, we go on like MEXC, since we're talking about MEXC. This shows you the reserves here, right? It shows you what the reserves are in on the right-hand side. So we have mostly USDT, then Pump token, MX, which I believe is their token, Bitcoin, Kavada. But yeah, sometimes these are like Pump might not actually be worth that much of their funds based on their liquidity. Sometimes it'll be inflated value. The inflated valuation, that's like a whole other lesson by itself. But then you go see here, for example, we go to USDT, we grab the address. We can see that their USDT is on the Ethereum chain, and they also have some on the Tron network. If you want to look at the reserves for each individual unique asset or network, you have to go to their that network's Explorer net. So Ethereum is etherscan.io, and then you put the address in here. So then you can see the activity of that wallet. Like, are the funds going in or going out? Where are they going to? Right, so this is showing you the funds coming in and out, the value of it right here. And there's a few ways you can do this. You can either like just write down the value one day and then find out what it is the next day and see if it's dropped by a certain amount of percentage, or you just go over here to the analytics and see the balance and see how it's doing. And you can see that like the balance is going down slowly, like USDT is coming out. Since December of 2024, they've been in a downtrend with their reserves for USDT, which it's not always a bad thing. It could mean that those people, the holdings are going towards Bitcoin. So you check the Bitcoin, see if it's going up. So that will tell you internally if the funds are flowing to like Bitcoin, for example. But yeah, that's kind of like one way you can look at the reserves. KSEX does not show the reserves. I do not trust KSEX. Hack trades. The moment they show the reserves, I've asked them to multiple times because they're asking me to like promote them on the channel and stuff like that. The moment they show the reserves, I'll let you guys know, because then I'll be putting it on, probably in the links that I shared with people. I never want to direct someone to an exchange. Like, I'll feel absolutely terrible if I brought someone to like another FTX, right? So I'm always watching the exchange reserves before I talk about it to anybody. Brian saying he uses KSEX. It's good for smaller accounts. I would say that's okay too. But if it's everything you have in the crypto space, then you just don't put it on an exchange without reserves. Unfortunately, like the advantage usually with the ones that don't show the reserves are they have absolutely no fees. So it's good for trading like the small gaps, like the small ranges and stuff like that. But I'd rather pay the fees for safety. All right, guys, I definitely got to go. It looks like Bitcoin is flagging right now, falling wedge structure here. Those stack liquidity above us, so we might come up, grab that liquidity, use this as our strong low, and then we can prepare for a good short. Or we might just get a continuation. If we get the full body close above this, this is the 5 minute, full body close on the 5 minute here, could induce the move to our liquidity target here at 95.4. But I'll give you guys a signal today, of course, if I find something safe. And I'll let you guys know when I enter and when I exit, the same way I always do. Why not deposit USD daily and pull it out daily? You could definitely do that. That's probably the safest thing you could do. But you won't be able to hold your trades if you're doing it on a daily basis. But if you're just doing scalp trading, that's the safest thing you can do. It's just a lot of work. That's all. Yeah. All right. All right, guys, I got to head out. You have yourself an amazing day. Thank you for watching. And I really, really appreciate everyone who subscribes, everyone who's liked the videos. I'm giving a giveaway on Monday. So anyone who is watching on Monday, I basically just going to be going through a subscriber count with an automated system and giving you guys like $50 worth of karma tokens. So I really appreciate everyone who has been following, commenting. Sam, nice to meet you, bro. You're crazy in the chat. If you're still there. We've got some new faces in here. It's pretty cool. You guys have a great day. Thanks for watching.